This entry is my weekly outlook for the trading week that begins from the 18th to the 22nd of November 2024. What I do every week before I go into the trading is that I take a look at Forex Factory, I take a look at the Forex calendar to see what high impact news events I can expect during the week and when. This determines what I do in the markets on those days. Now, I only trade the euro dollar, the pound dollar, and gold. And so I have filtered my Forex Factory to only show me, and then I only care about orange and red folder news. So you won't see yellow folder news events, for example, on my Forex Factory. I only take a look at the red folder news days, the orange folder. You can essentially even ignore orange folder, just the red folder news days and what events they are what are important. So on Monday, for example, we can see that there's basically nothing. It's all orange folder. If I see a good setup on Monday, I'll take it. Now on Tuesday, we have the monetary policy report hearings for the pound. And on Wednesday, we have CPI for the pound. Now that's a big one. If I'm and what I need to do with this is now I might not be trading the pound. I might be trading, let's say, euro dollar on Wednesday morning. But because I know that there will be a lot of volatility on the pound dollar, I should expect some degree of correlated volatility on the euro dollar, although maybe not quite to the same extent as the pound, but I need to be aware of it so that I'm not taking unaware in any euro dollar trade that I might be in on Wednesday morning. Now on Thursday at 2:30 we have unemployment claims for the US dollar. Not a huge not a huge news not a high impact news event. And then on Friday, the pound has retail sales. Now I want to talk about this Friday lineup. You can see Friday 8 a.m. Now this is UTC plus one, that's my time zone. Now Friday 8 a.m. you see that the pound has retail sales. This last week had retail sales for the dollar. Now at 9:15, Euro has French flash manufacturing PMI. It also has French flash services PMI. Now 9:30, just 15 minutes apart, there's German flash manufacturing PMI. At 10:30 a.m., there's pound flash manufacturing PMI. And then at 3:45, there's dollar flash manufacturing PMI. The reason I wanted to take some time to discuss this is that I have learned in my experience now being mindful of these events. Now, they are not extremely high impact news events, right? Like I say, the big ones that typically tend to make me wary of the markets is just NFP, FOMC, or dollar CPI. Those are the big three that I'm really wary of. For all these other ones, I can trade in and around them. It's just what I like to do is if I'm in a position I like to exit that position before the news comes out, depending on how far away price is from my entry. So I have an example of something that actually happened to me, and I learned a very harsh lesson. I was in a trade that was profitable. I think it had given me I was in 2 hour profit, and that 2 hour, the range of the 2 hour was about 20 pips right ahead of 9:15 a.m. So I was in a trade from Thursday afternoon, the previous day, coming into Friday morning, and shortly before 9:15, my trade was in 2 hour profits. Now the ultimate target I think was either 3 hour or 3.5 hour, maybe even 4 hour, the liquidity target that I had. What happened was that, and I know that news brings volatility into the market. It has happened to me before where I'm in a position and I just leave it open, and then when the news comes out, it spikes against me and takes me out for a loss. And it can be very painful for a trade that you've held since Thursday afternoon, you've held overnight, you've seen 2 hour on that trade, and then you end up taking a loss. So what I did was I moved my stop to break even. Now there was about a 20 or 25 pip range away from where the trade was at this point to my break-even point. And what happened was that French flash manufacturing PMI came out and spiked down against me. It was a long trade. Spiked down against me, took me out for break even. Now, 15 minutes later, what happened was that German flash manufacturing PMI came out and spiked twice the range of the French flash manufacturing PMI spiked 2 times that range in the opposite direction, that is in my direction, the direction of my trade. So let's say French flash manufacturing spiked down 20 pips. German flash manufacturing came just 15 minutes later and spiked 40 pips in the opposite direction, ultimately hitting what would have been my take profit for a 3.5 or a 4 hour trade. Now, that taught me a very harsh lesson that day, because if I had just held the trade, I would have made money. But more importantly than that is that if I had just closed the trade for 2 hour profit, I would have been in a much better place mentally. I would have had much better mental capital. It would have been much better for my trading, much better for my equity and my balance to have secured those 2 hour profits before the news came out. Now, I did not know what the news was going to do. Of course, if I had held the trade, then I would have had to watch that entire retracement. And I did hold it, to be fair. I did not close it out, but I moved my stop to break even. And what happened was that it took me out. Now, if my stop was not at break even, at the point where price was coming all the way down, you can imagine the amount of panic I might have been in, because nothing was to say that the German flash manufacturing PMI would come out and would not continue spiking down to ultimately take me out for a loss. Right. So instead of putting myself through all of that mental strain of watching the trade, spike down in one direction and then a few minutes later double the spike in the other direction, I think I would have been much better served closing out the trade. And so that's what I do now. If I'm in a trade, ahead of any of when you have multiple news events, stacked up like this, 15 minutes apart, 30 minutes apart, or 1 hour apart, on days like this, what I do is if I'm in a trade that I took hours before, let's say the day before, and I'm seeing 1 hour, 1.5 hour, 2 hour, before the news event comes out, what I want to do is I want to close that trade, lock in my profit, and let the news release do whatever it wants. I don't care. It can spike 100 times and give me a 1:27 if I would have held it. I don't care, because I know that if the other thing had happened, it is more painful to lose a trade where you've made some profit, you've made some money, and you're holding it because you want to hold for your ultimate target. It's more painful to see that trade spike against you, reverse, and take you out for a loss than to close the trade out at 2 hour profit. And then, yeah, you wish I wish I had held it longer. If it goes in my favor, I wish, but you could not have known that. So what I do is I make the best informed decision for the data that's available to me at that time. Now we move into the chart so that I can quickly do my analysis of the price action and what I am expecting. Now on euro dollar, again, we start on the monthly. My objective on the monthly has not changed. I am expecting price to take out this monthly low. It's a monthly and a weekly low, visible on both time frames. Remember, the ultimate objective is still this particular low that is sitting right on top of this monthly fair value gap. I want to see price trade into it and then see what price does around this area, if it will just ultimately close it out or if it will signal the start of a reversal in the opposite direction. Now we go down to the weekly and we see that this weekly low was traded through in the week that just closed and it closed below it. Now, if price had traded through it and then closed aggressively back in this range and we had, let's say, a blue candle, a bullish candle, or not even necessarily a bullish candle, let's say we just had a huge wick at the bottom, that might have signified that this level held and we may be in for some form of retracement or I'll try to reversal into some of the premium arrays of this bearish range. But that did not happen. Price closed below it, which tells me that there's still a lot of bearish momentum and this target is still likely to be met. So my bias is still bearish. Now, this weekly candle that has now closed created this weekly fair value gap, and I want to outline a small point here. It has now created this weekly fair value gap, which has a range of about 190 pips, 190 pips away from current price. Now, 190 pips can be delivered on volatile days within 2-3 days, sometimes 4 days. So this week might look something like this because I don't see there's no more liquidity. This liquidity was obviously not enough to push price in the opposite direction. I don't really see any level that can push price, that can keep pushing price down. So what I would like to see ideally, now it's very possible that the week opens and price just drops, and meets the ultimate objective, in which case I'll reevaluate to see if price dips into this monthly fair value gap here and if I change my bias to bullish. But if that does not happen, what I am anticipating is that at the start of the week, I want to see some bullishness, right? I want to see price trade up. Now, this is not likely to happen. 190 pips is not likely to happen on Monday, Tuesday, or even Wednesday. So I may not get an entry from the weekly fair value gap. Now, since the weekly point of interest is so far away from price, I go down to the daily to see if I have anyone that is closer. And that's what we see here. There's a daily fair value gap here that remains unmitigated. And Now, I have a lesson that I learned the harsh way again some time ago. If you have a weekly point of interest and you have a daily point of interest, essentially you have a higher time frame point of interest and a lower time frame point of interest sitting below it, as in this case, if I want to take shorts, I am mindful of the fact that a lot of the time what will happen is that price will do this, trade into the daily level, and it is a daily level, still a higher time frame level. So it may give some form of reaction. It may push price down a few pips, 30, 40, sometimes maybe even 50 pips, right? But it may not be the point from which the overall bearish trend resumes to target these lows down here. So a lot of time what you see is price will do this, give a small reaction. You might be in the trade for 1 hour or 2 hour, and then the same day or maybe the following day, it just trades through it, takes you out to target the higher time frame, in this case, the monthly fair value gap, from where the move, the impulse to the downside will then resume and ultimately take out this low. I've seen that happen many times. And so what I do is if I have two points of interest really close to each other, now I treat them slightly differently. If it's a 4 hour, if let's say this was a 4 hour fair value gap and the one on top was a daily fair value gap, there's no decision to make. I absolutely ignore the 4 hourly and wait for the daily to be tapped. But when you start getting to daily and weekly points of interest, there's a bit more nuance because it can also happen that the daily fair value gap will get traded into and price just continues from there. Price just melts to the downside because the daily fair value gap is strong enough to push price down all on its own. In which case, the trader has a decision to make. Now, do you want to risk taking this trade, losing it, getting taken out for price to then trade into the weekly fair value gap for the move to continue? Or do you want to risk missing out on this move? Which will hurt you more? How would you react? So let's say I know that there's a weekly level sitting on top here, but instead of waiting for the weekly level to be tapped into, I take the daily level because I know that the daily level can push price down. Or do I want to wait for the weekly level? Now, it's possible I'm waiting for the weekly level and then the daily level just pushes price down. How will I feel missing that trade? How am I going to react in that kind of situation? These are the possibilities, the probabilities that the trader needs to navigate that I have to determine for myself. So let's say I don't want to risk missing out on this trade. Price are trading into the daily level, and then it gives me an entry. I don't want to risk missing out on the trade. What I can do is let's say I've allocated 1%, right, to this entire trade, any short trade in this entire area. What I can do is I can go in with 0.5% here so that if price goes in my favor and the trade plays out, fine, I make some money. But if price does not do that and trades against me into the weekly level, now I'm only down 0.5% and I still have another 0.5% to risk, which would even present me with a much better risk to reward. So if, let's say, I have fear of missing out, that's something I can do. If I'm not afraid of missing out, I can reserve my entire 1 hour for this level. And if this level gives the trade, then I miss out. I don't make any money, but I preserve my capital as well. Now, what so that's what I'm looking at. That's a big lesson that I've learned from my time in the market. Depending on what price does. Now, it's also very possible that price trades into this daily fair value gap, and then just trades through it. All the 15-minute candles, bullish, bullish, bang, bang, boom, and then no setup is formed here. That makes my job as a trader easier. I don't have a decision to make. I know I'm waiting for the weekly level. But this dilemma that I've just painted only applies if for some reason this daily level is traded into, takes out liquidity, and then gives an entry, gives a signal, gives a setup. That's what I'm looking at for euro dollar, either this level or this level to continue going short. Now that might change. Price just, let's say Monday's price action trades bearish, Tuesday's price action bearish, Wednesday's price action bearish, and then a daily fair value gap is formed on the body of Tuesday's candle, like what happened this week. This candle, this candle, and this candle. A daily fair value gap was formed here, which I traded from. If that happens, then I might switch my point of interest from all the way up here, far away from price, to the new fair value gap that would have been created going to the ultimate target. Pound dollar will be something similar. Let's take a look at the pound. So for pound dollar as well, similar price action. This low has been taken. The ultimate objective will be somewhere here. I'm looking on the daily to see if there are any points of interest. Now, there's this huge daily fair value gap, which would probably overlap with the weekly or the daily fair value gap on euro dollar that we just took a look at. Now, I will see what price does. Let's say at the point where price is trading to this daily level, it's trading into the weekly level on the pound on euro dollar, then that may give me more confluence. That may give me more confirmation to take a trade either on euro or on the pound, depending on which setup looks better, depending on the risk to reward, depending on, let's say, how the engulfing, how big is the engulfing candle, or how huge is the shooting star. I can look at all the assets that I trade and make an informed decision on which one is the best to trade. Let's take a look at gold to see if there's something similar. So, similar scenario with gold. Gold has this daily fair value gap overlapping with a 4-hourly fair value gap, and there's this huge 4-hourly fair value gap sitting on top of price as well. So, I'll take a look. This is actually a daily fair value gap, huge daily fair value gap. Let me change the color coding of that. So, this is something that could happen. Price could, some bullishness at the start of the week, trade into this level. It may fail or it may hold, depending on, again, what I see on the other pairs, or it may ignore all of this, trade back into this. Now, this is a much larger liquidity pool. I would much prefer to see a trade from here. Price does this into this daily level and then resumes price action to the downside. That is my outlook for this week.